Diving right back into the numbers this week, we are looking at Japan's gross domestic product growth rate, as well as looking at the inflation numbers that came out of the US this week. So let's go ahead with Japan. It's surprising good news out of a few weeks of really tough news for Japan. Their economy actually expanded 3.1%. That was a percent higher than even what was forecasted or the consensus was at 2.1%, driven strongly by the earnings or the income that increased in Japan about 5%. So that really pushed everything up in terms of consumers, I guess, spending back into the market. Do you have anything that you kind of have looked at and thought was interesting, especially considering the situation in Japan as it stands with the markets and interest rates and kind of their overall economic position?
Yeah, I mean for Japan, it's great news. Being up to 3.1%, then other than this 2.1% that were expected, that's great. And also taking into consideration the inflation rate in Japan, which is around 2.4. I don't know exactly where it is, but it is above 2%. And as soon as GDP grows more than the inflation does, that's that's a great situation for country. We will also have to see where it goes with the currency, how it moves forward. The markets had a very strong rebound, which is still holding on in Japan, which was kind of surprising that it is that strong. Also there, we see the Japanese yen, which has started to weaken again since it appreciated so strongly at the beginning of August. So there are a lot of different factors that play in their favor. But I mean, also on the other side, it can always go the other way around that uh, at the end of the year, growth comes in lower than what was revised in between.
Yeah, and I think what the interesting point there is the Bank of Japan
Yeah,
raised interest rates ahead of these numbers, but I think they had a pretty good picture of where they might be.
yeah,
They didn't necessarily signal, but they're looking at these numbers not in perfect real time, but they're seeing the economic activity, getting this data. So I think it's quite an interesting move to see, oh, hey, look, we're going to have this jump in GDP. Let's raise interest rates to ensure that inflation doesn't go higher than where it could. And I think it was a really, I guess, a strong move. I think personally that gives Japan's central bank a little bit of credibility to kind of try to get ahead of inflation, even with a growing gross domestic product faster than inflation.
yeah. I think it was a smart move, but they are still in a tough situation. I
Yes.
mean, they are still close to zero. They're at 0.25%, which is very, very low. So they don't really have that much wiggle room. And also, when you think about at what stage the world economy is and the threats that are looming also in regards to tariffs, that there will be more tariffs introduced by governments to protect their domestic economies, that can also hurt an economy, an exporting economy
Yeah.
as Japan, probably not as strongly as China, but still, I mean, there are some threats, and the central banks should position themselves accordingly.
So we'll jump right into the inflation numbers in the US. They came down.
Yeah,
US is finally out of the 3% territory at 2.9%.
yeah, for the CPI, but not for the core CPI.
Correct, which is what I was coming to next, is that their core inflation is still higher than 3%. And that really still shows this challenge of the economy that your basic kind of expenditures are still really high. It's big news because now all of a sudden we have lower inflation. We've the lowest inflation reading since April 2021. For me, that just tells me you've had incredibly high inflation for 3 years plus, and that's super taxing on the population. And I think a lot of those cracks that we were talking about. I mean, I remember when we were looking at the economists in the U.S. and the Treasury secretaries in the U.S. talking about how inflation started. It's just transitionary, and we all looked back at each other and said, "No way, this is transitionary." And it turned out that it wasn't transitionary, and they've had a really hard time fighting it.
Yeah, and I mean, at that point, let's face it, it's not that much anymore about what the actual number is. Markets are rather looking at what's the direction it's heading. And they tried it already last October, November, but then it turned out it's not coming down as fast as they expected. but still it is coming down. And so even so we are almost 1% above the target inflation rate of 2%, investors are very confident that it is coming down. And you can also see it at the markets. While a week ago markets started to panic because unemployment rate spiked in a way, I mean, it just trended up a little bit. They are now having or experiencing a lot of release from this inflation number. And then there were also other economic indicators as the retail sales, which were very strong, which gave more confidence to the uh, to the to the investors. And in September, I mean, so far it looks like everyone almost is on the same line that the Fed is going eventually to decrease interest rates. Now the discussion has started whether it will be 25 basis points or 50 basis points. Also there, I mean, in the longer term, it doesn't matter that much. I think a 50% or 50 basis point decrease or cut would rather be negative in a way that it would be like a reaction to a fast or quickly worsening economic environment.
Yeah, and I think that they'll probably start with 25
Yeah.
basis points. It seems to me to be more of a, I guess, cautious approach. And if they've, I mean, they've been hawkish on inflation and interest rates for so long, to just go the other direction too strongly, I think could give, as you said, kind of a negative signal.
Yeah.
And that's not what they've been talking about in the media, that the economy is good. Yeah, there's some issues, but there's always issues in economies, so we're trying to go for this soft landing. And I think, in line with that, I think 25 basis points would be more realistic. Looking at it from that side, I think what's also interesting is seeing the consumer sentiments when you look around various countries or economies. The European consumer sentiments are quite negative. Even we
Yeah.
talked about this recently about Switzerland. They're growing in terms of their GDP. It's not fast or big, but it's fine. It's nothing terrible. Their consumer confidence is low. If you look at it in the U.S., I mean, same with Germany is low. Even they're coming out. UK, they're coming out. They've had positive GDP numbers in the past few months. At the same time, their consumer confidence is low. Whereas you look at the U.S., people are still, it's lower levels, but they're still positive
Yeah.
on which direction it's going. And I do think that's interesting to see that where the consumers are, I guess, moving. And when you look at how many people are invested in the U.S. economy than opposed to Germany, I mean, the U.S. is like what, almost 60%.
Yeah, a little bit over 50, 60%,
Yeah, and then
65 or so. Yeah.
in Germany it was like 19% or
Yeah.
even lower. So it kind of, there's a lot, I think, of that consumer sentiment that sits also within the investing market. How's the investment market doing, and how do I feel about the economy?
Yes.
Next week we are going to be talking about some consumer confidence numbers. Also, there's the Jackson Hole meeting that's going to take place next week, so hopefully we'll be able to talk about that. And if anything else pops up, obviously we're going to cover it.
Wonderful.